Joining us now for more are Sandy Villery, who's co-portfolio manager of the Villery Balanced Fund, and Victor Jones, who's director of trading at TD Ameritrade. Guys, welcome. And kind of a wild session here, Sandy. And in fact, a lot of the steel names are kind of smaller and mid-cap names. What's your best guess about what investors should do on the heels of this announcement?
Yeah, so if you do see these imports or these tariffs on imports, you're certainly going to see some major issues, if you will. But I think that what we're focused on is some smaller cap companies are going to do a lot better. I mean, this is the Trump trade. This is protectionism. These are all the things that he's kind of stood for. And if I have an opportunity to buy a steel company like Nucor that's growing at 2%, I want to avoid companies like that and really focus on bottom-up fundamental stock picking, because I think stock picking is back. So I think that's the focus that we have here at Villery & Company.
Victor, obviously we understand all the focus. We've had this focus, too, on the tariff move and obviously how it seemed to push the market down in the afternoon. But dialing back a little bit, looking at a somewhat bigger picture, where does this market sit? It still seems like it's trying to figure out how this corrective phase is going to go. Does it need to retest the lows? It's trying to sort out the right value to place on some pretty good earnings. So I wonder where you see the general field position of the market right here.
Yeah, you take a look at volatility here. Volatility remains in the marketplace. The VIX jumped another 13% here today. It touched 25. And, I think there's a general sense of optimism here. And I actually think our clients have been much more cautious. They looked last week on an abbreviated trading week, light market volumes heading into a big data week this week. And they really worked on removing or pulling back on a lot of their exposure as the markets continue to be choppy. This is the third straight day, the second day in a row, by the way, that yields are moving lower, and you're continuing to see catalysts or reasons that investors are looking to pull back in exposure. So I think our clients are cautious here, and they're also very aware of the fact that when volatility spikes, correlations amongst all of those sectors increase. In other words, take a look at the S&P 500. There weren't many places to hide today when you start to see a fairly weak market. And I think our clients are very aware of that. And so when you talk about rotating into small versus large cap names, on a day like today, small cap only lost less money than some of those larger cap, high beta, high multiple names.
And meanwhile, Sandy, the chip space has been doing pretty nicely here. I don't know if they're going to be much affected by what's going on. I guess if trade disputes got really bad, they could. Is that a space you like?
Yeah, I mean, it's been good, right? You've seen it up about 35% in the last 12 months. So it's obviously been good. But we, again, want to be very stock specific. And so we're going to look at companies that are cheap relative to the space, maybe that haven't made that move. We love a company called Cypress Semiconductor that trades at about 12 or 13 times earnings versus its peers at about 20 times earnings. And these guys are, they're selling chips into the Amazon Echo and the Apple HomePod and Nintendo Switch and all the things that go along with the Internet of Things or the connectivity of the home, as well as electric vehicles like Tesla. So we like Cypress a lot, and we think you got to be very, very specific when you're choosing stocks in this type of market.
Yeah, and Victor, do you think that could become leadership? I mean, we talked a moment ago about how it was around this time last year that the tech trade turned on and kind of the Trump trade came off a little bit. What do you think about the leadership now?
Well, I think it's really easy to make the statement. You look at, let's say, low beta, high yielding stocks and make the case that in a higher rate environment that those stocks become a little bit less attractive. But you also have to remember that a rising rate environment doesn't do many favors for bond principal either. And for that reason alone, I think if you take a look at some of those bond proxies, telecom, you just mentioned earlier in the show, Becky, that Verizon held up fairly well today. That some of those bond proxies may continue to be or may be attractive and hold up in a rising rate environment here, just given the overall nature of bond principal and what's happening in rising rate environments.
Yeah, and we'll see if that continues or not. A lot of moving parts. Victor Jones, Sandy Villery, thank you both for joining us.